So essentially, I've covered a number of the majors. I did Aussie gold. I think I did the S&P, the dollar extensively, the euro, sterling dollar, in a couple of videos. So if you go back to the members area, the chat room there, you'll find those videos. The first one was on the dollar. The second one was titled "The Watch List." I've covered the NAS for someone, and I've also for Kill, and I covered what else did I cover? Gold futures, um, sterling yen is there, dollar yen is there as well. So you can all jump onto those. They're for everyone to use. But really, it's all about the Fed today, and I think I'm just going to be sitting on my hands. We're already quite a way into the this gap time, and we're coming up to the Wall Street Open, and we're going to have a whole load of data, I believe, ISM, JOLTS, and then we're coming into the Fed. So it's basically a loaded calendar with a lot of risk. Um, And the thing with data, I mean, it can come out often counterintuitively to what you'd expect. Well, the price will react um, counterintuitively to the data. So for me, I don't have a strategy to navigate around that situation other than letting it play out. Maybe if you've got a setup that aligns with your thesis for the day after the event has come out, um, and if you get a nice scenario where you've got the data that aligns with the price action, and then you position yourself in that move, then fantastic. Otherwise, you're sort of going against the trend, or often you're in the matrix trying to trade um, in the unknown and sort of second guess what the market might do, and then that's gambling, really, isn't it? Um, so that's my take on the day. For me, on Fed days, I'd rather just sort of sit back, get my popcorn out, and let it play out, and watch how things develop throughout the day. And then it'll be easier, really, from that point on for the following days to trade against what you're actually seeing, what's already been put in place. It's all there on the charts for you. You've got a market structure to lean against, and you can trade as normal thereafter. So far more, well, less stressful in that environment. It can be stressful trying to trade around using the Fed. So that's my take. That's my approach to it. But by all means, let me know if there's anything in particular you want me to go through. Um, the scenario around the Fed really is they're widely expected to, well, the FOMC is expected to extend a pause to the rate increases, keeping policy unchanged for a second consecutive meeting. Um, so I think for the dollar, really, there are bigger risks of a sell-off if there's a dovish interpretation on what is expected to be sort of a hawkish hold, if that makes sense. So if you've got any questions around that, let me know. But let's have a look at the dollar where it is at the moment. Um, we'll come right out to, let's come out to the daily chart. And I did a video on this, which was the first thing I posted in the chat if you want to look it up. But briefly, this low here um, was the origin of this break in structure over here. In fact, we might see that better on a weekly chart. Let's go out to a weekly chart over here. Is everyone seeing that screen okay? The chart, that's the dollar index I've got here. So as you can see, this low broke this inside candle and these highs, right? So we've got a strong low in place, and that is, for me, a recipe for an upside continuation towards the bull cycle highs, which I've marked on that chart there, 107.34 and then 107.99. So those are the bull cycle highs here. and then we could be coming up to the November 2022 highs at 108-ish. That's the long-term outlook technically, and fundamentally that ties in with the um, narrative around the US economy outpacing the rest of its peers in terms of the Eurozone and so forth, and the crisis in the Middle East, and the general demand for the US dollar in such an environment. Front side of that bullish trend, no reason to be thinking that this is heading lower, despite being in potential supply territory. We could be pounding our way through those offers in the dollar and continuing higher. Do we have any pairs that anyone wants me to look at specifically? We're 35 minutes away from the PMI and ISM a bit further out. We're coming up towards our Wall Street Open. Okay, euro dollar. Euro dollar, euro dollar, euro dollar. Where are you? So I've got this down as a continuation trade to the downside. So that was analysis that was done earlier in the day. If you care to have seen the watch list, so that's already playing out. So you would have wanted to be a part of that earlier on, or the outcome of today could be that we're dropping to drive up, and then we're looking to sell late in the day. Perhaps it's just a theory, a scenario that could play out. If I could try and get rid of that ATR panel, we might be able to see it better. There we go. Right. So the thesis is that we're in the hands of the bears. So we had this high put in yesterday, and we've reversed firmly, and we've moved away from the closing price of yesterday, that blue dotted line, 105.75. And I've marked this as selling territory over here because it's at the end of the day, the dust of all that's going on today in terms of the data, the Fed may well have started to settle late in the day, and we might be up high. Who knows? No idea what the outcome is going to be of the data. I'm just drawing a scenario because for me, I don't want to be chasing a horse that's already bolted, right? I'd rather see it come back to the stables and then take off again, if that makes sense. Um, no, I don't have a thing for horses. I'm not sure why I'm using that as an example, but I hope that makes sense. We need to be selling up high, right? So we've got that Friday closing price as a line in the sand for the week, sort of potentially the central point for the week. Perhaps we're coming much further lower. I mean, we've got last month's, bear with me, last month's lows over here as a target, 104.50-ish to the downside. We might be slap bang in the middle of this week's range. This could be coming much lower. But for the day, we've already dropped, and I'm not sure if I want to be chasing the move, especially on a day like today, that when anything can happen, we're bound to see volatility, and we've already seen a fair bit. This is quite a lot of the daily ATR that's already occurred. We're potentially coming into a support area here. Let's mark it green for support. Potential support, a demand area based upon Friday's low. So we're coming fast approach. Well, we're in that now. We're trying to take it out. This is a 15-minute chart. We've got a minute before this candle closes. If it closes firmly below, then perhaps that's a sign that we're coming lower still, and then we're heading into the Wall Street Open. We may see some volatility, or we might see traders sitting on their hands considering the day ahead and all the data that's coming out in due course. I mean, look at that. We get the PMI at the open. But perhaps we'll be waiting for the rest of the data to come out before real moves start to happen before the Fed. Okay, so that's the euro. Cable will be a similar scenario. It's bound to be taking off to the downside. Again, that was covered in the watch list video. Taking out yesterday's lows now. So that was an inside day until that move. It was lagging the euro, but it's now catching up with the euro in that it's broken yesterday's lows. The euro had already done it early in the day in London. Cable's catching up. So shorts are in the market, and we've got Monday's lows as a target. I drew this as a scenario that we might be pulling back from within yesterday's lows, but we're breaking out at the moment. Most breakouts fail, so I wonder if we won't get a pullback back into test potentially this breakout area. So we pumped up, dropped. So this here would be regarded as resistance below yesterday's closing price of 121, call it 121.50. So below 121.50, I'm bearish, and I'm looking for a move that continues in line with these shorts for a downside continuation to test 121 the figure and a dip below that. Gold. No, sorry, Mr. Q. No video streaming. Many times I get a problem that video live doesn't work. Any solution? I'm gonna bear with me. Let me try and stop streaming, and I will re-stream. So trying again for you. Right. Let me know if that works. If it doesn't, you'll have to catch this on the rebound. I'm recording it, so I'll post it as soon as we've finished up. Just bear with me. I'm just checking. I'm not missing a meeting or anything. Okay. Right. So that's cable. Being asked for, I think, gold, was it? Gold. I think gold is one of the trickier ones that I was looking at earlier on. So yeah, well, not so much. Look, it's front side of that bullish trend on the day, and we've got a potential scenario where all of these traders that were trying to chase gold that was going up, up and up and up and up and up on a daily basis, up into last week's highs in anticipation of a continuation yesterday up through there, have been trapped in an almighty long squeeze that broke Monday's lows, and we're staying below it, it seems. Now we're pulling back to it. Now it could act as resistance, and if it does, then this bullish trend line will come under pressure. And if it does, then there is a case for a downside continuation. So bearish impulse, breakout traders to the downside, breaking Monday and Tuesday's lows today, pullback, inevitable, not inevitable, but common. Most breakouts fail, you get a pullback and prospects of a downside continuation, potentially. So that is a possible scenario for the day ahead. At the moment, we are above the closing price of yesterday. And if we stay above there, then we're likely headed towards that resistance area that I've talked about. And if that holds, downside. If it doesn't hold, then, well, this bullish trend will remain intact and upwards and onwards into towards the psychological 2000 area. Aussie, AUD. Here we go. So, what are we doing with this Aussie? Yeah, this is inside of yesterday's range, pumping up above yesterday's closing price. So we're pumping up potentially to meet resistance in yesterday's high volume area. So far it's proving to be resistance. I think that was explained in the morning video. So what I recommend, guys, if you want to get ahead of the game, I'm not claiming that I'm always right, but I give my outlook for the day first thing in the morning. I try to get it to you as soon as I get in. It takes me a while to put it all together because there's a whole bunch of instruments that we will look at. So I try to go through as many as I can within a 20-minute video. And I post all of this stuff for you ahead of the meeting. So often you can catch what I've talked about ahead of the meeting because, as you can see, some of this stuff already plays out before we get to this point. But it's not to say that you haven't missed a move, because this is anticipated to be resistance, and perhaps we're going to get an opportunity to scalp for a downside move from resistance. But while we're front side of the trend, there's nothing to do. We need to see this break down. For me, I don't particularly, advocate trading an instrument that is within the prior day's high and low, because there's not a bias either way at the moment until we break yesterday's high or low. But we can use these supply areas as sort of footprints to lean against and build a thesis on. So the thesis is we're up high to come low. Perhaps we get a retest of the closing price that is acting as support, as you can see. And it's been the origin of a move up. So we've got volume that's moving higher. Perhaps it's going to get trapped in a surge in the US dollar, depending on the outcome of the Wall Street Open, the data that's coming up, and the grand finale in the Federal Reserve. In a scenario that the dollar does rip today, then we've got yesterday's lows as a target that guards last week's lows down at 62.70-ish. Okay, so any other pairs you want me to look at, guys? Otherwise, I'm going to wrap up. I've got a busy day ahead. I've got meetings and so forth. Right. Please share the screen. Don't know why you're not able to see it, my friend. It is there. I'm going to do your New Zealand CAD individually because you can't see the screen. So we'll wrap up here, guys, and I'll see you guys in the chat room. Thank you for being here. Sorry if that feels rushed, but we just got plenty going on, and you'll be better placed at your own screens, I think, in the scenario. And I think we've pretty much covered everything that there is to cover there or thereabouts. So thanks for being here. Appreciate you all, and catch you up in the chat room.